Welcome to Smart Stock Watch. Today is July 23rd, 2025, and we're diving into AT&T's latest earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. I'm excited to discuss AT&T's performance this quarter.
Let's get started with a brief overview of AT&T and the newly released Q2 2025 earnings report.
Absolutely. AT&T is a major player in the telecommunications industry, providing wireless and wireline services. Their Q2 2025 report shows a strong performance with significant growth in net income and earnings per share.
Revenue and profitability overview. Let's start with the top line. AT&T reported total operating revenues of $30.847 billion for Q2 2025, a 3.5% increase from last year. John, can you elaborate on this growth?
Sure. The growth in revenue is primarily driven by a 15.9% increase in equipment sales and a steady rise in service revenues. This indicates strong demand for AT&T's products and services.
And what about profitability?
AT&T's operating income rose by 12.9% to $6.51 billion, and net income attributable to common stock increased by 25.9% to $4.464 billion. This is reflected in their EPS of 62 cents, which beats the analyst forecast of 51 cents.
Segment performance. John, let's break down the performance across AT&T's segments. How did each segment contribute to the overall results?
The mobility segment was a standout, with revenues of $21.845 billion, up 6.7%. This was driven by strong equipment sales and service revenue growth. However, the business wireline segment saw a decline in revenue by 9.3% due to legacy service reductions.
And what about the consumer wireline and Latin America segments?
The consumer wireline segment showed a healthy 5.8% increase in revenue, thanks to broadband growth. Meanwhile, the Latin America segment experienced a 4.4% decline in revenue, reflecting challenges in the region.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. How is AT&T managing its expenses and cash flow?
AT&T's operating expenses increased slightly by $14.346 billion, but they managed to reduce interest expenses by 2.6%. Their cash flow from operations was robust at $18.812 billion, indicating strong liquidity.
What about their debt levels?
AT&T's long-term debt stands at $123.57 billion, which is high. However, their ability to generate cash flow and manage expenses effectively provides some cushion.
Looking ahead, what can investors expect from AT&T?
AT&T's focus on expanding its fiber network and enhancing 5G capabilities positions it well for future growth. Investors should watch for continued improvements in operational efficiencies and strategic investments.
Key takeaways. In summary, AT&T delivered a strong Q2 2025 performance with notable revenue and net income growth and an EPS that beat expectations. John, any final thoughts?
AT&T's results are impressive, especially in terms of profitability and EPS performance. However, investors should remain cautious about the high debt levels. Overall, AT&T is on a solid path with its strategic initiatives.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on AT&T's performance in the comments below.